I just want to check if the audio is good. And there's a live chat. All right, guys. I'll wave into the camera. And then I just want to make sure that the audio is good. Can you guys hear us okay?
The audio is good.
I guess I'm not going to be able to keep an eye on the live chat, but we have Sasha actually in the audience. If you see any good questions out there, all right. We just finished the presentation. I'm going to do that presentation and record it at Unconfiscatable. And let's do some Q&A, guys. Raise your hand. I'll try and repeat the questions for the microphone, and we'll take it from there. All right.
When you say that Bitcoin is unconfiscatable, what prevents countries from actually going into the exchanges and getting maybe 80–90% of all the coins in there?
So that's a good point. So during the presentation, I talked a lot about Bitcoin being unconfiscatable, why I named my conference that way. That doesn't apply to the exchanges that are going to be regulated. And this creates a big dilemma, even for me, because I hate the fact that Bitcoin doesn't have a single price. You always have multiple exchanges, and we saw Bitfinex, go completely out of line all the time. So there isn't a single price of Bitcoin. Apple stock, S&P 500, you always know what the price is. There's one price because all of the stock, all of the supply is sitting in one place. And there's one exchange that has Apple stock. There's just brokers that are using, that you access to buy and sell it. So the problem is when it comes to the Bitcoin ETF, I'm not happy with the fact that in order to have like a really stable price of Bitcoin, all the Bitcoin needs to sit in one place because that would stop someone with a few $1 million to move the market on a single exchange, and then the rest of the exchanges panic. So having all the Bitcoin in one place actually creates a much more stable market. But having all the Bitcoin in one place creates huge risks. One of them is that's one giant pot of Bitcoin for hackers, external, internal, and it creates the same situation as gold in 1933, where with a single phone call, the government comes in and confiscates it. So if, let's say, 50–60% of all the Bitcoin is sitting at regulated exchanges like Coinbase, Gemini, underlying an ETF, then that's a problem because the government could come and confiscate it. The only, I guess, saving grace is which government, right? So I don't see all of that Bitcoin being under the control of a single government. So either all the governments have to get together and agree to something, which never happens, or like the US would have to be dominant. And I don't know how much more dominance the US has. I mean, the United States is pushing superpower limits. Countries don't usually stay as a superpower for over 100 years. Usually about 100 to 200 years is the max. The US has broken that 100-year barrier. And US days are numbered, but I don't know if it's 3 years or 30 more years, right? Or 60 more years, nobody really knows. I mean, Italy and Rome did it for a while, probably longer than anyone else in history. But other than that, since the 1300s, it's been about a 100-year run, and that's it. So we'll see how much longer the US can have. So it's a concern. It's always been a concern. So if too much Bitcoin is under the control of the regulators and the government, then people may start to lose faith in Bitcoin as being fully independent and hard money because it could be confiscated. But yeah, that's a concern. Yes.
So when talking about like a global currency system, and let's just say Bitcoin aside, economists for many years have debated over whether a currency system would have to be elastic or inelastic, and whether its supply needs to be changed during certain times depending on demand for currency and other economic factors. Do you think that Bitcoin will be able to be used as, let's say a first layer settlement currency, or even a second layer? Or do you think that there could or maybe should be some form of, stable coin where there's, programmatic monetary controls and monetary policy?
Yeah, so that's a good question. I thought I saw the levels were decent on the mic, but basically, can the world actually function on a deflationary currency without an elastic money supply? Is the summary of the question. And I don't really know. That is something for economists to debate. I'm not an economist. I just read a bunch of stuff, but it's interesting. So for me, at one point, I was a big believer in the gold standard. Then I was a little bit, more open to having an elastic money supply, where my biggest problem with fiat, and again, I credit a lot of my economic knowledge to Martin Armstrong, who Troy recommends his blog. I haven't read it in over a year, but I used to read it religiously before that, where he explained very nicely why fractional reserve lending is critical, but it has to be done properly. So he described it as there are three types of loans. There are, in fractional reserve purposes, there is the good style of lending, which is where the bank does create money with fractional reserve for the purposes of lending to businesses they feel would succeed. And then as these businesses succeed, they would create more economic, everyone benefits, creates growth in the economy, and those loans are able to get paid back and the debt cancels. So that is considered to be good lending. Then there is neutral lending, which is creating money out of thin air with fractional reserve and lending it for the purposes of buying a home. Creating money out of thin air to buy a home creates very little economic activity. It creates economic activity in the home builder sector, but it basically puts the owner of the house to buy that house earlier. He may be a little more comfortable, is a little happier. Maybe he's happy to work more and earn a little more money, but by the time the loan is up, he ends up paying double what the house is worth. So it doesn't really stimulate the economy, this type of lending. So it's kind of neutral, but it is a loan to a private person. So it's good. Now, the bad type of loan is the loan to the government, because government doesn't actually, create much, and they never pay anything back. So that's the type of fractional reserve lending that needs to disappear. So if you can only stick to the fractional reserve lending for businesses, that's good, and for houses, that's neutral. So what I envision, I actually find it very hard to believe that the world can function on a gold standard and full gold standard. I just find it a little difficult. I don't know how credit is going to be done, how this kind of stuff is going to be done. So what I envision is countries still having their own fiat currency, but they would almost be forced to somewhat peg it to Bitcoin. But even if they don't peg it to Bitcoin, having your country's currency fully digital, because they're not going to have cash for too much longer, and Bitcoin will keep them in check. They can still, have their own currency, but people will always have an option to use Bitcoin. So a country that's actually, they say they're going to contract the money supply in good times, but nobody ever does. Because the moment they start, the markets panic. We're seeing it now with the stock market. They're like, we're going to raise rates, and the markets panic. So they can't raise rates, right? So they talk a good game about, hey, when it's good, we're going to contract it, but they never do. And that's why you just have runaway inflation. So I do foresee government currencies aren't going anywhere anytime soon, but because of Bitcoin, it'll just make them be a lot more responsible. I'm also looking forward to one day politicians, doing the responsible thing and putting all of tax revenue through the Bitcoin blockchain so that it's open and auditable, and we know where the money's going. Like a lot of it has to do with taxes. Like with today's technology, I really don't understand why, and no one even suggested, why can't we allocate the paying our tax revenue like we allocate like a 401k portfolio, right? Like, hey, the government is forcing me to pay 20% of my, well, you guys are in Florida, so you're paying these between 23 and 35%. Those in New York are paying close to 50%. And California, same thing, right? So, but why can't I allocate where my tax money is going? Why do they get to decide, right? Why can't I, okay, fine, you're making me pay half my income into taxes. Why can't I allocate 90% of it? Okay, I want it to go to roads, I want it to go to schools, I don't want it to go to war, I don't want to fund this, I don't want to fund that. So hopefully one day our technology will allow us to do that. Give them a little chunk that they can choose where it goes, but the rest, let the person choose where the money gets allocated. And it should go through a Bitcoin blockchain so that every transaction is fully public, which is another reason why I'm not a huge fan of anonymity at the protocol level. I'm also not a big fan of anonymity as an optional opt-in, because most people don't do that. So there is a happy medium there somewhere. Like the wallets need to have anonymity as the default, but the protocol level, I believe, should not have anonymity at the protocol level. It makes it hard to see what the hell's going on. Like, how do you audit how many Bitcoin there are? It could be difficult. Like Zcash has this problem. And hopefully all the tax revenue will be on one of these protocols through wallets that will not have any privacy, do not have any fungibility. So you know exactly where the tax revenue is going and how it's moving. That's the future I'm looking forward to. I hope I answered your question. All right, question there, then we'll go to Sasha.
Building on that question, if you believe Bitcoin is the hardest money and we as humans will always spend the weakest currency, doesn't that by definition basically define Bitcoin as only a use case, only a store of value?
Well, not necessarily, right? Because you're going to spend the weakest currency, but eventually you're going to want to get paid in the hardest currency, right? Like, I like getting paid in Bitcoin even in a bear market. So eventually you run out of weak currency to spend, and then you have to spend hard currency, right? So you're only spending the weak currency while you have it. Eventually you don't have it. Eventually you don't want it, right? If everyone is spending it, who wants it? I mean, you're seeing this now with Bcash, right? It's down to what, it's down to 2.4 or 0.3% of the price of Bitcoin. They wanted their currency to be, you don't save it, spend it. Everybody spent it, nobody wants it, right? So eventually you run out of the weak currency and you're left with, well, fine, I'm a Scrooge. I don't want to spend any of my Bitcoin, like your tone vase and you're driving around a 10-year-old car. Eventually I will have to buy a new car, right? So eventually I will have to spend that Bitcoin. And as we saw, when the price of Bitcoin goes up, you don't want to buy that Lambo. People do spend a lot more Bitcoin as the price goes up. They sell that, they get scared and they sell the Bitcoin for fiat when the price goes down. But as far as buying goods and services and using that Bitcoin in economic activity, that goes up greatly when the value of a Bitcoin goes up. So at the next bull market, you're going to see a lot more spending of Bitcoin. And it will be so much easier with scalability and Lightning and microtransactions. Like again, if Bitcoin can offer you microtransactions that fiat can, you're going to spend it. I mean, what's the big deal to spend $5 worth of hard money when it's going up in value? So the deflation argument doesn't really make sense. I mean, we all buy things like electronics, just like, again, cars depreciate instantly. electronics depreciate instantly, and everyone still runs out and buys a new phone every year for $1,000, right? So you're gonna spend it. You know, you're gonna want that new iPhone. You're gonna spend it.
One moon.
Oh God. You know, I'm trying not to answer. The question was when moon. I'm trying not to answer questions of how high Bitcoin will go until I've officially declared that the low is in, and I haven't declared that the low is in. So I'm still waiting for to call the bottom, and after I call the bottom, we can start talking about the top. Like if the bottom is in February or the bottom is next December, you know, that's a big difference of when the moon phase can finally begin. So something I avoid.
So you kind of touched on it for a second, talking about privacy, at least at the protocol level. But do you see privacy as an important aspect of Bitcoin? And then, you know, if so, do you see it fixing some of its scalability issues, at least from a privacy standpoint?
Okay, so I see privacy as important, but it's not as important as the other two products.
Unconfiscatable, that is.
Unconfiscatable and censorship resistant value transfer. And the reason for that is that, and I've had this argument on Twitter the other day. I meant to address it on my YouTube channel, but it's good to like mention it now. Like all the people that care about privacy in Bitcoin, they're already in Bitcoin. They're already in, like all the libertarians, all the anarchists, except for like the hardcore gold bugs that their life would be over if they say that Bitcoin is good. Except for like except for like a small handful of people, right? So all the people that care about privacy are already in. So who's left? Well, people that don't give a shit about privacy are left, right? These are people that use Facebook every day, that you know, the people that aren't public, like somebody like me. I mean, I'm public. Everyone knows where I am all the time. So what does it matter if I have my location turned on my Twitter everywhere I tweet? But so the majority of the people that are left to enter don't care about privacy. And this concept that, well, Bitcoin can't go up unless it's private is ridiculous. The fact that if Bitcoin goes to private, like why would Wall Street want a private currency at the protocol level, right? Like the government's not going to want them in there, right? Like again, the government, like a lot of people would be scared that they were breaking the law by using like Bitcoin privately. So privacy at the protocol level comes with its own challenges. Now, of course, that's the right thing to do. It's better for the world, but
Can be idealistic.
yeah, but people still have this mentality that, you know, I have nothing to hide. Like that's the general mentality of people. So that's one reason. So one reason is it's actually going to be harder to get people in if you have anonymity at the protocol level. So you need like some anonymity, but it needs to be very simple opt-in or a default opt-in at the wallet level, but not the protocol level. And again, like the whole tax issue, like there are so many things you can do that are beneficial for society without having anonymity at the protocol level. And that goes away because forcing the government to have non-anonymity opt-in ain't gonna happen, right? So you gotta try to find that happy medium, and also changing the protocol level is not gonna happen, right? It's this whole argument, like this is why I hated the whole big block argument. It's like we're arguing, I debated Roger Ver back in 2016, early 2016, February 2016, and we argued over this. And I'm like, and even back then, I'm like, I can't believe I am arguing this. Like, you're arguing with me, like you're upset that like we don't have colonies on Mars yet. But I'm like, but you can't go there. Like when we're debating what's going to happen on Mars, but we can't go there. It's like we're debating a bigger block, but like we can't have a bigger block. Like it's a non-starter because we can't change the protocol level. So it is what it is, and we're stuck with the protocol level as is, and I'm actually okay with that. We just need, you know, the right people building the wallets, and we need somehow have good funding for wallets that give you fungibility as a default opt-in at the wallet level. And hopefully when governments start using Bitcoin to settle some of their transactions, the wallets that they are forced to use don't have any privacy and fungibility in it, so that we see what they do. Did I miss the question?
No, that was good.
Good. Yes, in the back there.
So after subsequent halvings, assuming that Bitcoin scaling is achieved through second layer solutions, what then can possibly sustain the fee market and incentivize miners to continue securing the network? And does Bitcoin have a potential expiration date?
Yeah, that's a good question I get often. What happens when a mining subsidy is gone? Which is why I think the smarter move by Satoshi would have been to just have 50 Bitcoins per block forever. At least there'll be something going into the block. So not something we have to worry about for another 20, 30 years at least. As long as Bitcoin keeps doubling in its price every 4 years, mining subsidy doesn't change, right? So as long as every 4 years, Bitcoin, and I think Bitcoin can double in price every 4 years for a while. So the mining subsidy doesn't change. Of course, more and more people want to mine because they would think they can print free money. So the hash rate keeps going up, and therefore it's becoming harder and harder to actually mine. So I see a couple of things there. One, I think there is enough people that will mine altruistically at a loss. We're not strangers to paying for things at a loss. For example, I am home maybe 2 months a year, but yet I pay for internet throughout the year. How many of you have a gym membership you don't go to? You swear you will, but you don't. Come on.
Lives.
Come on. Right? So we're not strangers to paying for something. Like how many of you have automatic payments to your credit card, to some app, paying every year and you don't use it, right? So when you have your life savings in Bitcoin, it will become almost like a utility bill. You may be willing to run that one miner and pay $50 a month in electricity, knowing that you're helping decentralize the network and help process transactions. So I, for example, will always mine with a single miner. And so I think there's enough people that would care about how important it is to have Bitcoin to just mine at a loss. And I can see that with companies, right? Like, for example, a company who's getting a good chunk of its revenue from the fact that Bitcoin exists. The example I use is like Netflix. Like Netflix can go into regions where they wouldn't think of accepting credit card payments because of rampant credit card fraud. But they can now pop up a QR code and someone can pay to watch a single movie, single show, right? And if all of a sudden a company like Netflix is generating an extra $1 billion in yearly revenue, why not spend a few $100 million running a mining farm to make sure Bitcoin survives, because otherwise they lose $800 million. So I see businesses mining at a loss. I see a lot of people in the future mining at a loss. And that's not considering the fact that transaction fees could be enough to sustain mining. But even if transaction fees are not enough to sustain mining, I do see people mining at a loss because of the utility that they get, right? Because every utility bill that you pay, like your electricity bill that you pay, I mean, that's a loss to you, right? You don't have to pay your electricity bill. You can heat your home for free, right? You can go and collect wood, and you can burn that wood, and you can chop trees down. You can live somewhere to avoid paying your electric bill. But you're going to pay that electric bill because it makes your life easier. And if you need the internet, you're going to pay that internet bill, right? So if something is bringing you profit because it's vital to your business, or it's vital to you having money that would appreciate in value because of its deflationary nature, why not pay a bill to keep that going? So I can see that in the long-term future. Go there. Go your back section.
Hey, so we saw last year that the launch of the futures in the CBOE was probably linked to the downfall of the price, where we had the large traders being able to bet short. Do you see any similarities or differences with this NASDAQ listing futures coming up in beginning next year?
I don't. So the question is, what effect did the CBOE and the CME futures had on the end of the bull run, the start of the bear run, and will the next round of futures, and I can even add the whole backed thing to it, the launching of backed, which was delayed again. I think it's this, what is it now? January 24th now. I see them, I don't see them as direct influencers. Like, to me, the launching of the CME futures, yes, it was almost to the day of the top of the market, but the market didn't go down because of the CME futures. I think the market went up unreasonably high because of the hype surrounding all of the good that will happen when the CME futures launch. And when they finally launch, there's like nobody trading them and nobody cares. So I think that the hype of the CME futures drove Bitcoin to unsustainable levels. And the realization that the futures don't change anything created the top and the subsequent big drop. So I think the realization that the NASDAQ futures and the backed exchange, the realization that that's not really going to change anything on a short-term level. I think the CME futures were very critical long-term, because by giving the government giving the stamp of approval to CME futures, it's basically impossible for the US government to say, hey, Bitcoin is illegal now, kind of like marijuana, right? Or kind of like alcohol back in the 20s, right? So, or was it 1918 or 1919, 1918, whatever it was. And so I think it legitimized Bitcoin from a regulatory perspective. And that's a very good thing long-term, because it makes it harder for the government to claim it to be illicit. But on a short-term level, I think the realization that it doesn't change anything was what caused the top of the market. And now, when the backed launch got delayed, that kind of added to the bear market. So when backed finally launches, I think Bitcoin will be oversold. So they're going to say, hey, backed launched and it marked the bottom of the market. Well, not really. More like the pessimism of backed potentially not launching or being delayed again has ended. So it's not that backed would change anything short term. It's just that I do think the delay in backed in the exchange of backed just demoralized people a little bit more. So it's all psychological, because most investors think long term. A lot of people try to preemptively do stuff. I mean, this is why during the last halving, and I said this back in the halving took place in July, I was doing Q&A and work and meetups like this back in December. So 6 months ahead of time, I said, well, the hype in the price of Bitcoin is going to go up several months before the halving, because traders are going to want to one-up each other. They're going to buy into Bitcoin before the halving, before the trader next to him does. So I think the same thing is going to happen here. I think people are going to start buying in preparation for backed, and then they're going to realize that backed hasn't changed anything, and then the bear market will still be with us a few more months, and then eventually it'll turn around. So again, I don't see a direct effect, but more of an indirect effect.
Thanks.
All right, we got, Sasha, then we'll
Question
go.
from the internet.
Yeah. Audience
So,
question.
Yeah, by Skywalker. Do you think the 200 moving average weekly will end the, I think you meant bear market? I haven't seen capitulation, still too many alts, too many institutional and retail holders. And then other people were saying that you believe we need to see all the altcoins go away before Bitcoin can start to climb again. So maybe could you comment on that?
Sure. Well, the 200-week moving average, I mean, we're almost there. It's at 3,000, if my memory serves me right. So no, I don't think it will hold it. I don't think the 200-week moving average will hold the price. The 50-month moving average has a chance, and I don't think Bitcoin's been around for 200 months yet. 200 months is what? That's almost 20 years. That's like 15 years. We're not there yet. So I don't, because I do think we're going to go lower than 3,000. I don't think we're going to go much lower. We're not going to stay there for too long, but I think we are going to go lower than that. But as far as, yeah, I can't see another bull market where, you know, the alts are dominating. And if Bitcoin turns around, you know, in the next month or so, I think a lot of money is going to pile back into altcoins, driving altcoins higher and faster than Bitcoin, lowering the Bitcoin dominance. And I don't see Bitcoin dominance going down in the next bull run. I think the next bull run, Bitcoin dominance also has to increase. And like again, I'm going to use Bcash as a great example. I sold all my Bcash on the second week when I realized that it's actually not gonna immediately disappear. So I sold my Bcash at 0.1 Bitcoin per Bcash. So I got a 10% subsidy on my Bitcoin. Those that waited another month were able to get, you know, 25%, 20%. So you could have definitely got more. Right now, Bcash is at 2.5%. Now, granted, Bitcoin SV is also almost at 2.5%. So combine them together, and you still have that 5%, but still half of what it was a couple of weeks in. Now, I think that's going to keep going down. So the point is this: on the next Bitcoin bull run, will Bitcoin ABC or Bitcoin SV rise faster than Bitcoin? It shouldn't. The same should be said for Ethereum, Litecoin, Monero, and all the rest of them, right? And they have to fall far enough for that to happen. Like for me, I think that the Bitcoin forks, like Bitcoin ABC and Bitcoin SV, have to go into single digits, like down to like $5, like back to single digits. Ethereum has to go to lower double digits, like back to like 15 or 10. It can hang around at 15 or 10. Ethereum is infinitely inflatable. They have, you know, they don't even know what their monetary policy is going to be. They're debating it on Twitter. I mean, everyone is moving. Like most people are now moving to EOS and other currencies. Like all of those other stuff, like they shouldn't be currencies. So I think we need to fall far enough on the old coins that people aren't going to speculate in them again. And if we turn around now, I think people are going to be piling into alts, and I don't think that's going to happen again. So we have to fall far enough for people to forget about the alts. They're not going to go to zero. They're not going to go away. But like when if Bitcoin falls to 1,500 and then goes to 50,000, back to new all-time highs, something like Ethereum needs to still stay under 100. Like it should be nowhere near its all-time high. Like Ethereum needs to go down to 10 or 15 bucks and then maybe pump to $100 as Bitcoin goes to 50K. So that's what I'm expecting to happen. Kind of like what happened on the internet. Like Amazon fell with the rest of them, but it didn't fall down into the pennies, and it did go to new all-time highs where the majority of its competitors did not. Like even if they're still like Overstock's been around forever, right? Like where has it been? Not going anywhere. All right, we had a couple of questions. Let me go with here, then there.
Thanks. With hyperinflation, spreading around the world and with how the banks run the industry, do you think it's wise to be accumulating Bitcoin with money that we typically put in savings, or do we wait for capitulation? And then once we're at the top of a bull run, do we just put it back in the banks, or what do you?
Yeah, so, well, the thing is, you have plenty of time to think about what to do with your money at the top of the next bull run.
Sure.
Plenty of time to think about that. We all probably should have thought a little more of that at the last bull run. So I think a Bitcoin that's under 3,000 is like, I'm gonna start telling my family and friends once again, you may want to buy Bitcoin, you may want to listen to me this time, you may want to buy Bitcoin. So I believe dollar cost averaging under 3,000 is, I don't want to say, trying to use careful words here. I'm going to do it. I'm not sure where I'm going to get the fiat from, but I'll think of something. I'll go donate blood or something. Like whatever I can do to get more fiat under 3,000, I'll put it into Bitcoin, right? And so that's a good idea. Now, at the top of the next bull market, when you feel that Bitcoin has appreciated enough, just buy stuff with it and improve your standard of living. By then, a lot more places are going to accept it. Just use it. So don't necessarily, you don't really want to cash out into fiat, especially in 5 years from now. I think that the concept of 2% inflation is finally starting to hit that exponential level. And it starts to become very, very tricky. And I mean, holding fiat is dangerous. You saw from the Cyprus example, from the Greece example, from my presentation. Back when I was reading all the gloom and doomers, it's like, oh my God, they're gonna put my entire 401k into government bonds. I actually don't think that's gonna happen. But technically, it's possible if the currency is collapsing. So, knowing what to do with your money when you have a lot of money is the easy part. It's like having the guts to cash out or knowing when to cash out is the hard part. But yeah, I do think under 3K is a great time to start dollar cost averaging. You may have an entire year to get in on the low. I mean, you did it all of 2015. The entire year was under $500. The entire year. All right. Next.
So my question is about the correlation of Bitcoin with the traditional market. And when I think back to 2008, 2009, we saw markets falling apart. We also saw gold and US Treasuries correlate and go down with it. And then at the bottom, there was the move to gold and Treasuries. Do you see Bitcoin as following a similar path in the next US market recession, or do you think it'll be more correlated to hyperinflation?
Yes, that's a good question. The question is about the correlation of traditional markets. So I don't think they're very correlated on a short-term basis. They could be a little bit correlated. On a medium-term basis, I think they're not, but on a long-term basis, they kind of are. Because stocks and gold and Bitcoin are all things that I consider private assets. Private assets in that they're not government controlled. So people invest in them because they have money. So when a recession hits, and this is why gold crashed 33% in 2008, when the stock market crashed 50% in 2008. Because when the stock market crashed, so many companies went out of business. So many people lost their jobs. So if you had any gold, even gold teeth, you went to sell them, right? Like if you're broke because you lost your job because the economy is crashing, you're gonna sell whatever you can to keep feeding your family. And that's why I think gold severely went down in 2008. But then during the recovery, I don't think, there was some hype in gold as to that, oh my God, the monetary system is collapsing, we're gonna go back to the gold standard. And it could have also been a coincidence. it was just gold's time. I mean, gold was in a 26-year bear market, right? 26 years. Peaked in 1980, and then we were going, and then it bottomed out in like 2003, 2004. It was at $200. So gold was in a bull market. And when things are in a bull market, they stay in a bull market. So gold was in a bull market. Gold was going to 2000, regardless of 2008 financial crisis. The financial crisis actually slowed down the move of gold. It was just its time. Now we had the whole oil bubble in 2009 when oil went to 150 bucks and then crashed to $35. And it has not seen 150 bucks since. It didn't even come close. Went to like 110 and then dropped down to 25 again. So, and that was just like, what was that, right? Like the world was running out of oil? Not really. That was 2009, it's 10 years ago. Oil went to 150, now oil is 50. So it was just hype. It was just hype and traders. Sometimes bubbles just get out of control. So, but the fact that it's private assets matters because historically, people move from private assets to public assets. And the stock market should not be discorrelated with the bond market. That's just a global anomaly. I don't know how long it's going to last. Like usually people move their capital from bonds to stocks, from stocks to bonds. They don't really rise together like they did for a while. And now they're kind of dropping together. So I still think that corollary is going to break. I think that the rise in rates and the inevitable defaults of government currencies will drive people into stocks. They're like, well, Apple is still going to be building phones that people line up to buy, no matter how bad the financial situation is. So I do think that the bond bubble will drive the stock bubble, and then that will crash as well. And in the short term, when the stock market starts to crash and people feel poorer, they kind of want to keep their standard of living, so they will sell some Bitcoin if they're losing money in their stock portfolio. It's almost like what happened with altcoins. Like when you're rich in Bitcoin terms, when Bitcoin goes into a bubble and you're like, oh my God, I can quit my job. I have $300,000 in Bitcoin when it was 30,000 a year ago, and now it's 300,000 in Bitcoin. You know, what if I take 5,000 and split it amongst the shit coins? What if I buy, 1,000 Monero, they're only $1. What if I buy, 20 million Ripple, they're a fraction of a penny. Like, what do I got to lose? I'm just gonna buy a bunch of these lottery tickets, and then all of them made money. But then when the bear market starts, you're like, oh my God, like I know this token is useless, and I know it's fallen more than my Bitcoin, but I know it's useless. So I'm gonna sell that first. And that's why the altcoins went up faster, and that's why the altcoins went down further. Because people were gambling on them because they have money to gamble with. So the stock market and the economy is the same engine to like what Bitcoin does to the altcoins, the stock market and the really big money does to Bitcoin. So when the rich guys get very rich, they're like, yeah, let me throw $10,000, $20,000 in Bitcoin. What do I got? What do I got to lose? I have $1 million. I just made millions in the stock market. I just got a huge bonus from my company. Hell, Amazon just doubled my salary. And I'm not making $9 an hour anymore. I'm now making 18. I can go and buy Bitcoin, right? Ironically, Amazon doubled everybody's salary at almost to the day of the market, right? So when people do very well in good economic times, they're more comfortable gambling on things like Bitcoin. So Bitcoin rises. But when the economy turns, like they never really trusted Bitcoin. They were putting money in it to gamble. And they did well. And now it's going down. And now they're like, shit, well, I can lose my job if the economy goes to shit. What do I sell first? Well, I never really believed in Bitcoin. I did it because everybody else was doing it and I was making money. So that's what I'm going to sell first. And so if the global economy can turn around and the rich people get richer, they'll speculate on Bitcoin. They'll move their money into an unconfiscatable value. They'll, the government may go after the offshore. Probably should add a couple of slides. You know how the Swiss banks are no longer Swiss banks. They gave up all the names. Banking privacy is going away. The tax havens are going away. So the rich people may speculate on Bitcoin when they have money to protect. If Goldman Sachs goes belly up, whoa, that's gonna be bad for Bitcoin. That's a lot of rich people that are gonna want to cash out because they have to. They may want to hold on to their family a few more years. They have to sell the Bitcoin, keep up the standard of living. All right, question here.
Based on Tyler's hyperwave, I think there's 80 or over percent going back to phase one.
Mm-hmm.
Is it possible? And if so, do you think we can hold that, or?
I think we have to hold phase one. Talking about Tyler's hyperwave. So according to Tyler, there's 100% chance we're going back to phase one, right? And phase one, he has it at a flat 1,000. I have 1,300. It's almost the same thing. My concern is Bitcoin under 1,000 for a noticeable period of time. We can try to quantify what's under 1,000. To me, under 1,000 for a noticeable period of time is approximately $750 for longer than 2 weeks. That would scare the shit out of me. I wouldn't know what to do at that point, right? So I don't think we're going to get there. Because, and that was the point I brought up to Tyler, that you kind of have to hold phase one if you want your company to recover. And he went back and took a look and he said I was pretty much right. So if Bitcoin goes under phase one and starts to stay there, it might be over. So we have to hold the $1,000 to $1,500 area and bounce off of it somewhat noticeably and strongly. We can maybe dip below 1,000 for a day, for 2 days, for maybe 5 days, as long as a week at worst. But any longer than that, and mining could actually collapse and the whole system could be vulnerable. Is a better Bitcoin going to happen? Probably not. You're better off hoping that Amazon will give you a stable currency. Like Amazon points probably do well because they want to be responsible. They don't want to overprint Amazon points. They don't want everyone buying their stuff, right? So, we'll see. We'll see what happens. I hope we don't go as low as 1,000, but as long as we rebound quickly, we're okay. Set a bunch of buy orders. If you have exchanges, you should have buy orders everywhere under $2,000. That's what I would do. Just buy orders. Some at 2,000, some at 1,750, some at 1,500, some at 1,200. A lot at 1,150. Don't push it. Don't go for $1,002, right? A lot at 1,150, and then maybe some at 900, right? Because my guess is we're not going to touch under 1,000. I don't think we're going to 3 digits the way we didn't go to 2 digits last bear market. I got a question back there, and then we'll go there.
Okay, so say Tyler is wrong and we don't go to 1,000. One thing that I've always heard you say is the best way to predict the future of the market is looking past market cycles. Pretty much every bear market cycle in the past, we've ended with a 40% capitulation. So say tomorrow we had that capitulation, that would take us down to 1,800 tomorrow. So isn't it a good bet to always sort of be looking for 40% of where we are now as a possibility, as a very short-term possibility?
Yes, but there's always another 40%, right? I mean, we just fell 50%.
In a month though, not in the day. We fell from 250 to 150 last night and like.
True, but we fell a good 33% in a day, right?
We have, yes,
Right, like from 6,000.
right.
So,
I was watching for capitulation.
yeah.
I just didn't see the volume.
So, I mean, that's borderline capitulation. I think there's one more coming. So yeah, that should take us down sub 2,000. One more 40 to 50% capitulation. We had that January 5th in 2015. So let's see what happens again. I think it'll be a little later in the year. I'm still waiting for my rebound to 5,000 to 6,000, and then going back down to the 1,000 something area. So I'm really not anticipating this until earliest like May, April. But it could happen in January, it could happen in February. But yes, you do want to keep an eye on that.
Okay. Thanks.
What do you think about the future of security tokens?
It's just another name for an ICO. There's really all ICOs are security tokens. It's just that now they're changing the name to be more regulatorily compliant. So it's what they should have done to begin with. And so we get the question next. So here's the thing, right? So by following the rules and regulations, you eliminate the fact that you are an unlicensed, unregistered security. You are now a licensed and registered security. So now you've eliminated the regulatory risk, but your technological risk remains unless you start doing your STO on top of Bitcoin. Then you greatly reduce your technological exposure. And if you're building it on Ethereum, I expect Ethereum to go belly up. If you're doing it on EOS, I expect EOS to go belly up. You have a couple of choices. You can start looking into the liquid Bitcoin sidechain. You can continue waiting for rootstock. Or you can use what Giacomo recently created over in Milan. I think it's RGB or something, which is another tool to potentially host your scam coins. But if they're STOs, if they're licensed and regulated securities, that's fine. But again, you want to eliminate technological risk. Now, Bitcoin can also go away, and what happens? Like basically, if you have a compliant STO with the regulators, then all it comes down to what database are you on top of, and what is the risk of that database disappearing? Which is why centralized databases for your STOs are ideal, which is why you might as well just go public on the stock market, where you get to offset. Like, you're not responsible. Like, if you are a company that went IPO, it's not your responsibility as a company to manage the underlying database of where your stock trades. That's the New York Stock Exchange. That's the NASDAQ. That's the DTCC, the one that Patrick Byrne made so much. So if you're going to do something experimental with an STO, I mean, I don't know how they're going to be compliant with all the security laws. There's just another ICO. But you're also taking on database risk, which is unnecessary. And it depends on what that STO is going to be used for. I mean, if you're going to charge people in your STO to buy your product, then you have a stupid business. Because no business charges in their own stock for their services. Like, it makes no sense. You charge in currency as you come. So the STOs, I mean, if they're actually going to be, I mean, like, as far as I can see right now, the only difference between STO and ICO is the letter I is now an S. Like, I don't see a difference.
And you can't sell them on Coinbase or any other exchange because they're clearly a security and all the exchanges can't list securities.
Yeah. So again, where's your secondary market then? So what's the point? Like, you might as well do pre-IPO shares. Like, it's digressing back to what we already have with debatably better databases. Like I understand that the Wall Street has stale databases, but I don't see a big difference there. You got a question?
Yeah, I had a question about the over-the-counter markets. If big money is going into them, from what I've read, is that sort of affecting the value of Bitcoin? Like, shouldn't Bitcoin be valued more because of all the stuff they're buying?
Not really. OTC markets don't really do price discovery. Price discovery is done on the exchanges, like Coinbase, Gemini, Bitfinex, Bitstamp. That's what's doing price discovery. And OTC, for every buyer, there's a seller. So when you hear everyone is buying OTC, but the price is falling, someone has to sell it to them. So OTC markets are generally irrelevant. For every buyer, there's a seller. So if someone wants to come in and buy 100,000 Bitcoin and they're able to buy it, I mean, somebody wanted to get rid of 100,000 Bitcoin.
Do you think the miners?
Miners or people that had them before, early adopters that maybe are still up thousands of percent that were getting out. Like if OTC buys were relevant, we'd be going up in price, not down. So because there wouldn't be enough Bitcoin for them to buy, so they'd have to go on the open market to buy. But clearly there's enough sellers out there. So, and again, right, we heard this before. Like, when did Novogratz get in? He started getting in at $3,000 a Bitcoin. So he's about break even now. But he was in on all those gains. Like, he can talk that he's still bullish. But if his investors start bailing on him, if they're like, I'm leaving your fund, the moment I can take my money out and go to that guy, or why didn't you sell? He might have to sell. And he might be selling OTC, who knows? So for every buyer, there's a seller. And prices are going down. I mean, Bitcoin is cheap, right? If you're gonna buy it, you might as well go to the exchange and buy it at this point, right? If you wanna buy 100,000 Bitcoin, $3,000 each, you know, that's 100,000 Bitcoin at 30,000 each. That's still about 3 billion. I mean, exchanges don't have that volume, but if you want to start buying it, you can try OTC or you can go directly. Like, it's cheap enough. So you'd move the market to the upside, but no one's doing that. Yes.
This is a little bit of a loaded question because you got to spend some time with Willie, and I'm wondering if you've got in depth on the MPT signal and what kind of weight or what kind of weight you would give that signal in trading.
Not really. I mean, pretty much. All the information I got from Willie was public. There's no hidden information there. Like I actually specifically didn't talk to Willie about NVT outside of the camera. I'm like, you know what? There's no point of you repeating yourself twice. We'll just do it on camera. So there's no insider knowledge from Willie that I have. Maybe he'll give us something new at Unconfiscatable. I'm not a fundamental trader. I'm a technical trader. I like my tools. I'm not really going to trade his NVT anyway, so I have no reason to grill him privately on some kind of insider knowledge from me. I just wanted him to share it with the world. All right, guys. I think we're good. That's 9:45. Thank you, and we do have a little tequila bottle over there, probably not enough for everyone. But if anybody wants a little, I might do a shot. And I think we're gonna cut the live stream.
Yeah, thank you. I want to thank you all for coming. Coming again. Thank you, sir.
Hey, thank you.
I do want to express that we are
louder to the mic. Shout out to Blockspaces.
Thank you,
For the room. This is where the workshop is gonna take place tomorrow, right? Yeah.
That's right, yeah.
Okay, cool. Yeah, we got the trading workshop here tomorrow. And that's great. Then I'm off to New York for the holidays.
Awesome. Yeah, I want to encourage you guys to check out our website, blockspaces.io, and see all the events that are going on there. One of the main things that we do every single week is a Trading Tuesday. So led by Barry, a Tone protege.
Yeah, shout out to Barry for coming all the way to Chiang Mai to take my workshop and is now teaching it here along with his son. And also Barry, thank you for the tequila.
Awesome. So yeah, thank you for coming and feel free to come back and be at home with your crypto nerds here.
All right, thanks guys. Gonna end the live stream.